Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra. With me is Ekta. You're tuned into your stocks. And Ekta, for the market, it's not looking too bad, right? There has been that recovery. We're around 75 points in the green right now. The PSU Bank Index has seen quite a move higher in the past couple of minutes, so do keep that on your radar. There is good momentum seen in the banking names overall as well. 285 points higher on the Nifty Bank. And you know what's encouraging today is that the broader market is actually holding up quite well. So the mid-cap index is up over 1%. You're seeing a similar move on the small-cap index, something we haven't seen for a while, right? But crucial last hour and a half of trade ahead of expiry.
Yes, absolutely, Pavitra. And we're going into a holiday-shortened week as well. So maybe the volumes are going to dwindle on Friday, considering that will be the start of a new series, plus lots of holidays coming up. But nonetheless, as of now, there's definitely a good recovery which has taken place for the markets. We're going to take it with both hands. There's no kind of volatility that we're seeing. We have the Nifty, which has recovered to around 17,000. Remember, it has been sub 17,000 for most of the trading session. And we have the Bank Nifty, which is outperforming as well. So there is buying which is coming in for financials, up around 1% currently for the Bank Nifty, and the mid caps up over 200 odd points. So a lot of ground to cover in terms of queries. Let's get going in terms of introducing our guest this afternoon. We have Sharad Avasthi, who's the head of PCG research at SMIFS, and Rajat Bose joining in on the technical. Sharad is on the fundamental. Sharad as well as Rajat, welcome to the show. Let's start with the first query. We have Saloni Bhardwaj, who writes to us from Mumbai. Holds 50 shares of Nykaa, which is bought at around 200 rupees. She's a medium-term investor and wants to know what to do with the stock. I'm sure a lot of other people do as well, and whether she should hold it or sell at current levels. Well, Sharad, I'm going to start with you. Have you done any work in terms of a couple of these new age listings? How should one read them? Are these teething issues that they're going through, and maybe it is a fundamentally strong company?
Most of them are very fast-growing businesses. Even for Paytm, if you look at the way they grew, the last time the IPO was scheduled, they did not have Paytm actually. It was just 197. And the time the issue came out, Paytm was the brand which was the reckoning for them. So I think even for Nykaa, there are multiple products that they are putting up on the shelf. So they could turn out to be very surprisingly good over the long term. Like Amazon also, they started with books, but today you know how Amazon is placed. So that is the type of potential that they can have. But considering the current valuations, I think when someone buys into something like this, I'm assuming that they have bought it for the long term, because short term, obviously, the valuations weren't providing any kind of comfort. Even if we assume that the company would grow, say, at around 25% for the next 10 years, margins go up from 5% to 9%, and they are able to report a ring of somewhere around 8-9 rupees and trade at somewhere around 40 times. Your returns would still be around 9 to 10%. So I think that doesn't really make much sense for someone to stay back. Even if you look at long term, I think buying something else like say not apple to apple comparison, but Jyoti Labs could be a much better bet to buy into, and you get much better returns out of that. Even Dabur could provide you much better returns. So I think it's better that she gets out of this.
Okay, better to get out of this. I think for Nykaa also the other big negative, or the reason why the stock did fall this past week, is the fact that there have been 5 senior level exits as well. Rajat, the stock is down 20% this year. Do you think that it makes sense to hold on from a medium term perspective?
Saloni bought at 200 and now the price is about 127. So asking her to exit at this current level may not be very palatable to her. The point is that you can't do much about it, because this stock is not showing any kind of redeeming feature, and for it to show some kind of attraction, it needs to take out 150. On the other hand, there is another low, say about in the month of January at 120. I would say that put a stop loss below 120 on closing price basis and continue to hold on, because somebody who has purchased at 200 and currently the price is 127, even if the total holding may not be very big, but still it hurts definitely. So let's see if it falls below the all-time low of 120 or so. If that were to happen, then she should exit. Otherwise, I would, what I have reiterated earlier also, again I'm telling your investors, that look for two things. You don't have to look at technicals because that could be an arcane stuff for many. Look at the growth and look at the return on capital employed. For these kind of companies, return on capital employed would not be much, but at least there is some growth or not. But is that growth really adding to ROC? That ROC is increasing year after year, even if it may not be that great. If that is not the case, then I wouldn't really get into.
Okay, all right, Rajat. So that's the view coming in on Nykaa. We've lost Rajat's connection, so we'll reconnect with him. But he said that at least let it, it should probably, one should wait and see if it retests all-time lows. So that is something that is coming in on Nykaa in terms of a technical view. Nagraj G writes to us from Bangalore. He holds 50 shares of Infosys, which is bought at around 1,500 odd rupees. Medium-term investor wants to know the future prospects of his particular investment. Currently, the stock is at around 1378. Sharad, what would you be recommending on the IT space? Because there are these, there is this fear of BFSI actually slowing down. What is your sense in terms of how you would approach IT in context of all the gyrations in the global world, in the banking space?
See, I think first let's cover the point of banking collapse or a recession in the developed world, particularly US and Europe, because most IT companies get a lot of their business from those areas. We are of the opinion that this is not going to be a full-blown crisis. What has happened at Silicon Valley Bank or at some of the other smaller banks is not really a problem that has come out of the credit offtake. Credit Suisse is a different ballgame that has been into problem for some time. So I'm not expecting a full-blown slowdown in the BFSI space for most of the IT companies. They may not grow at the handsome rate at which they grew in the post-COVID era or just around COVID era. But normal growth should happen, and right now the growth expectations for most companies is 13 to 15%. A mild or very small technical recession in the developed world is also possible, but we don't see it impacting much on the IT companies. It should be very short-lived. And so I don't think there is need to panic so much. And the valuations right now are very attractive across the board for most of the IT companies. So for Infosys, I'm expecting, even if you expect a 10-15% kind of CAGR and a 25 kind of multiple on FY25 expected earnings of somewhere around $80, I think 1800, 1850 is the...
Okay, looks like there's some trouble with that connection. We're going to try to, repatch that line. But we were talking about Infosys, so let me try to get in Rajat's view as well. Rajat, your call on Infosys in particular, and from the rest of the IT pack, is there something else that you think looks better positioned right now?
See, I would say that Infosys, can you hear me first of all? Let me
yes,
check.
Rajat, we can hear you. Please go ahead.
Okay, fine. In that case, I would say that Infosys is very close to its 200-week moving average, which is around it is around 1304 as of today. So it is very close to that. I don't think that one should actually exit Infosys here, and as such the levels between say 1300 and 1230 would be a major support zone for Infosys. There would be a bounce back, maybe sometime down the road there will be a recovery and the stock would do well, because this is a correction that is lasting for quite some time and it would come to an end. You need not be too worried. If you are a medium-term investor also, you can actually continue to hold on. If you want to put a stop loss, put it below 1300 on closing price basis.
Okay, all right. So that's the view coming in on Infosys. That stock is just about marginally higher in today's trading session. Well, let's move forward then. Neeraj Kumar writes to us from New Delhi. He holds 50 shares of GAIL at 100 rupees and 15 shares of HPCL. So he has an oil and gas focus in terms of his investments, which he's bought at 200, HPCL at 200. He's a long-term investor, wants to know whether to continue to hold or sell these particular stocks. Rajat, what would your view be on both these oil and gas names, GAIL as well as HPCL?
See, just as the bank PSUs, even the oil PSUs are likely to do well this year. I mean, there is a lot of traction, especially in the oil PSUs, oil and gas PSUs, let's say GAIL. I would say that GAIL is in a long-term uptrend now, and if one were to hold it, as they put a stop below 92 on closing price basis. However, one thing one needs to keep in mind that whether this anticipated bullishness produces a move beyond 112, then one should carry on with it. Otherwise, if it fails to take out that level, then also one should seek an exit, or else keep a stop loss below 92 and carry on. Regarding Hind Petro, I would say that first of all, use 210 as your stop loss level. Use it on a closing price basis. But remember one thing, however much one becomes optimistic about, say, stocks like Hind Petro, in this case, unless it takes out 270 on high volume activity, do not expect any further upswing in this. Be it HPCL, be it BPCL or IOC, all are showing similar things.
Okay, got that. That is the technical view on both GAIL as well as HPCL. Sharad, coming to you for a more fundamental perspective for GAIL, at least, you know, the next big trigger is the gas pricing policy, right, which is expected on 1st April. How would you look at this, you know, before that, and do you think this is a good one to hold on to at this price?
Yeah, I think one can continue to hold on. The recent decision by PGNRB to increase prices is also favorable for them. Though the quantum of increase is not as much as they had expected. But I believe they have a hearing or something in the next 4 or 5 days. So how that pans out, that could be one trigger in the very short to immediate term. But even in the long term, I think the way they are placed, they should grow at around 17-18% kind of CAGR for the bottom line. So considering FY26 numbers, I think if they trade at somewhere around 10-11 times also, or even if you do an SOTP for the rest of the businesses, I think 130, 140 could be the fair value for the stock.
Okay, all right. So that's the view coming in on GAIL. The stock has gained in the past 3 odd months. But let's get to another query. Prakash Raman writes to us from Hyderabad. He holds 500 shares of Tanla Platforms, which he's bought at 751. He's a medium-term investor, wants to know what to do, whether he should hold or sell. Well, Sharad, this is definitely an interesting stock. Tanla Platforms, if you look at it, the 52-week high was 1,638. The stock is currently at around 529, which is closer to its 52-week low of 506. So it's been a steep fall that we've seen for Tanla Platforms. What's gone wrong with the stock? Do you think that this would be a prudent, what would be the prudent measure here? Hold on, let it recover to levels of at least where, you know, the investor has bought, or should you just book your losses?
The price movements are clearly on the stock, firstly on the upside, then on the downside as well. The primary trigger was the loss of one of their bigger customers, I believe. So that's triggered that fall. But the way the stock has corrected, it should unnerve anyone actually. But if I look at the business, the CPaaS market, particularly where they have a dominant position that has a lot of growth prospects over the next 5-6 years, we are expecting a 29% CAGR globally. So that should help Tanla. TrueBlock and Wisely, both the products are doing very well. In the immediate to short term, you can expect that the telecom industry is working very hard on establishing some control on the phishing and everything. So I think SMS will remain the dominant platform and Tanla will benefit out of that. And both the products are doing very well. Even the enterprise business is doing very well. So I'm hoping that they don't lose out more customers. Then you can expect that largely 20% kind of growth will be there. The first future growth expectations have been curtailed. So now you can expect a EPS of somewhere around 50 for FY25. And considering the prospects and everything, I think a 20 kind of multiple is possible. So yeah, it's possible you can hold for targets of somewhere around 1,000.
Okay, hold Tanla. Rajat, do you agree that you should hold Tanla? Because, I mean, it's seen a pretty sharp knock, right? In 1 month, it's down over 20%.
Well, I would say that Tanla, as of now, it's in a strong downtrend, and the downtrend hasn't yet completed. I mean, it might still go down further. If it were to go down, then once it reaches 485, there would be sharp fall. So 485 should be used as a stop loss if at all one wants to remain in this. And on the upside, you require a minimum of 605. That is the first signal point. That is, if you get past that 605 mark, then you can actually make a move. You can see that the stock making a move towards, say, the 800 mark, and only after 800 this will show real recovery. But this is a tall order, tall ask, whatever you want to say about it. But if I were the investor, I would have moved out on a rally or immediately get out if it were to fall below 485. And if it is really performing so well, why is the market not giving it proper valuation? Why is it so cut up with the stock? That's I didn't study it fundamentally, so I won't like to comment on that. But only thing is that market generally reads it pretty well.
Okay, all right. So that's on Tanla Platforms. Possibly selling on a rally is something that Rajat would recommend in terms of the technicals. We need to take a short, quick break, but we'll be answering a lot more queries on the other side. Stay tuned. Welcome back. Well, it's definitely a lively market on our hands at this point. So the mid-cap index is up over 200 odd points. We have an advanced decline ratio, which has only improved through the trading session. So that's important to point out. For example, it's around 2,000 stocks advancing on the Bombay Stock Exchange for around 1,400 odd stocks declining. So it's a ratio which has only expanded, as you can see, between the green and the red lines on your screen. So good going for the markets, good going for the broader markets, which had underperformed till yesterday on a week-to-date basis. But let's get some more queries going. Remember that we have Sharad Avasthi joining in on the fundamentals and Rajat Bose here on the technicals to answer all of your queries this afternoon. Let's get to a question from Rajat K, who writes to us from Bangalore. He holds 110 shares of Brigade Enterprises at 490. Medium-term investor wants to know what to do, whether he can remain invested for another year odd. At this point. So marginal losses, which you can see for Rajat's portfolio investment in Brigade Enterprises. Rajat, what would you recommend?
Well, I would say that he can continue to hold it, but I would have preferred to exit the position currently and re-enter around 350 odd levels, because what I envisage is that the market over the next 3 months would come down even further, and this stock too would actually seek lower levels. So either he continues with it and average at a lower stage, lower levels, or he gets out of it at current prices and re-enter around 350, 370 kind of levels. That would be a far better way of dealing with the market weakness.
Okay, got that. Sharad, your call on Brigade Enterprises. He, like we were pointing out, medium-term investor, he's saying around a year is what he's comfortable holding for. With that time perspective in mind, what do you think he should do?
Yeah, I think he can continue to hold. They are planning to develop around 12 to 13 million square feet over the next year, vis-a-vis around 8 million square feet last year, or in the current year, FY23. And earnings growth should be robust, 30-35%. They are one of the premier developers in the southern market. Concentration is in Bangalore. They are further increasing, they are diversifying also, and the leasing business should also start aiding profitability over the next 1.5 years. So I think the NAV for the stock should be around 600, 625. So I think it should trade at around that value. So he should hold for a target of somewhere around 600, 625 on the stock.
Okay, got that. That is the view coming in on Brigade Enterprises. Let's try to squeeze in one last query on the show. We have Ritu Singh who writes to us from Mumbai with an investment query. She wants to know whether she can invest an amount of 2 lakh rupees in Ashoka Buildcon. Sharad, how are you looking at this? I don't know how long she's willing to hold, but consider a medium to long-term kind of perspective. Is this a good bet?
Yeah, the recent developments have been favorable for them. The city gas distribution business, they have hived it off. They are also looking at hiving off some of the other businesses they have. And valuations are not expensive per se, and the whole construction space actually is in a good mood right now, and there is a lot of order book. So even currently the order book is around 19,000 crores, which is 2 times sales. So FY25, we are expecting an earnings of somewhere around 14 rupees. The demonetization could add to the further upside. But currently also, if we expect it to trade at around 8 to 10 times, something around 120, 140 on the stock would be possible. So yes, can be bought at current valuations.
Okay, so that's the last query coming in for this afternoon. Sharad as well as Rajat, thank you very much for joining in and answering a lot of the queries that we got today. For the markets, we leave them in absolutely steady hands at this point in time. The Nifty above 17,000. We have the mid-cap index, which has rallied over 200 odd points. Good advanced decline ratio on our hands, and we're seeing buying coming in for banking stocks. That's all the time that we have on the show. But do remember to email us your queries and we will address them with our experts. Stay tuned. Closing bell up next.